this year, I'm Chief Investment Officer of Green Eagle Holdings based in Hong Kong. Although this afternoon is about our panelists here, I'm hosting, I'm the one where I will be asking the questions. I'll try to leave as much time as possible toward the end for the group. But maybe I should give you just 1 minute of what we're doing at Green Eagle Holdings in terms of venture capital and private equity. For those of you who are from Hong Kong, you probably know that Green Eagle's Holdings is one of real estate companies in Hong Kong. We headquarters at the Green Eagle Center in Wan Chai, right next to the MTR Convention Center station, and with a number of office towers and residential real estate in Hong Kong. I set up the group a couple of years ago after I moved here from Silicon Valley. Even though the group is the main business is in real estate, but what I do inside the group really has very little to do with real estate. We mostly invest in high tech, biotech, AI, semiconductor, etc. The same kind of investments that most VCs do in Silicon Valley. So happy to answer more questions, but again, this afternoon is not about me; it's about our panelists. Let me turn this over to our panelists, and maybe we should start with Edan, and maybe we should give ourselves a brief intro and ourselves, our background, as well as the fund that we're investing from. Maybe we can start with Edan.
Sure. Hi, everyone. And Gary, I should congratulate you because after I attended the first luncheon meeting for Asia CEO, one would never have imagined how quickly it's grown. And is now thousands and thousands of members all across Asia Pacific, or in fact, all across the world. So congratulations to you. And I guess maybe a little bit of ourselves. Our firm has actually been in existence for about 30 years. And we're currently managing about $1 billion US, all focused on ESG. And we're basically following this trend because, number one, it actually makes a lot of sense with the world having been set by a lot of issues, climate change and others, inequality. And secondly, our investors have actually been encouraging us to go in that direction. Our investors would include development finance institutions like the IFC, which is part of the World Bank, the Asia Development Bank, FMO, which is part of the Dutch Development Agency, and then also DEG, which is the German Government Export and Development Bank. So with those financial sponsors as our catalytic financial investors, they have actually been encouraging us to go into these basically 3 pillars. And the first pillar would be, not surprisingly, clean energy. And we'll talk in a little bit about our investments in places like Indochina and Vietnam, where we have invested in solar energy and have successfully sold those businesses. We have gone into electric vehicle infrastructure. One of our companies, for example, is filing to go public in Hong Kong, market conditions permitting. So all of the things related to less of a reliance on fossil fuel and more of a reliance on clean and reliable energy, it would be the first theme. The second theme would be inclusive finance. And that's basically extending maybe loans to very, very small customers in rural areas, not in Hong Kong or Singapore or developed markets, but places like Vietnam and Thailand and Indonesia, and also India, One of our companies is publicly listed in India. It's called Gurmeet Kuta. They have about 3 million customers. They're all ladies, or 99% ladies, and they're borrowing something like $50 equivalent per individual. But it's a pretty powerful model because we've got 3 million customers, and they're borrowing money for things like family education, for their small SMEs in the rural villages, and that's a pretty powerful business model. Then the third pillar that I would point to would be what we call sustainable city. And sustainable city would be things like recycling, and would be things like waste treatment. So for example, in mainland China, we own 2 companies that are publicly listed in waste to energy. So those would be some examples of what we do with respect to kind of ESG type investment. And let me pause here and pass it on to other speakers.
Maybe a few words about yourself.
Oh, sure.
Background. Yeah.
I'm a Chinese American. I guess you could tell by my American accent. I actually moved to Hong Kong probably about 30 years ago, and have actually been here since. I was formerly a McKinsey consultant before actually joining the power sector in mainland China, and I joined a U.S. company that was developing power projects in the 90s, and then transitioned to private equity many years ago afterwards.
Great. Thanks, Edan. Chris?
Hi everyone. My name is Chris, and I'm the director at Zhang Capital. I founded this company with my partner Ryan back in 2012, so almost 11 years ago. 11 years ago. So we are a principal investor that invests in early stage companies. But at the very beginning, we used to invest in late stage companies in China, focusing on M&A exits and IPOs. But that was a long time ago, and starting in 2019, I think we started to selling down all our positions in China because we found a more interesting VC space, which is Southeast Asia. Even before the geopolitical tensions, we have actually done a lot of research about the SCA market, and we think it's going to boom like for the next 15, at least if not 15, at least 10 years. So we sell down all positions in China. So right now we have only one investment left in China, and we move all our principal monies to Southeast Asia. So we have investments in Singapore, Malaysia, and Indonesia. We also look at other countries, locations in Southeast Asia, but we like Singapore, Malaysia, and Indonesia. But why? Because Malaysia and Singapore is because of the language. There's not much language barrier, and if you look at the business law, they borrow much of the business law from the English law. So it's something that we can comprehend when it comes to contracts or agreements. And for Indonesia, we have because one of our LPs, Indonesian Chinese, so we leverage on that connection to penetrate the market there. So that's pretty much about our background. And one reason why I like to join the Asia CEO events is because I can meet a lot of different entrepreneurs. Because like in the VC space, I'm just speaking from my experience. Like people think that those investment managers or GPs, they know a lot about VC investments. I would say yes and no. Like in terms of the deal dynamics, yes. GPs or investment managers, they know a lot of the deals to do the investments. But if you want to know about the business about the industry-specific knowledge, you can only learn it from the entrepreneurs. And this is what my 20 years plus experience taught me. Always approach the entrepreneurs to get the answer. So here I am, and love to share.
Few words on your own background.
Okay. my background is a mixture of things. I started off my career as an auditor from Ernst & Young, pretty boring. But actually, no, it's a very good knowledge, because right now when I do due diligence, I don't really rely on other professional parties except LDD. Like LDD, I have to rely on my lawyer. He's on the floor right now. And but in terms of CDD or FDD, we can pretty much do it all by ourselves because we have that knowledge. And then I joined the other big fours, including PwC. It's good to be back here again as M&A specialist. And then I moved to the capital market, and then I started Zhang Capital as a principal investor with my partner Ryan. So Ryan, he used to work for Capital, a very experienced VC investor. So also personally, I'm a fan of AI. Anyone who's interested in AI, feel free to at my WhatsApp. I look at AI stuff all the time. And 2 years ago, when I graduated from my EMBA from Peking University, my graduation thesis was actually about the use of AI in the VC space. So yeah, so that's pretty much about my background. Looking forward to sharing more knowledge with you guys. Thank you.
Okay, thank you, Chris. Kersten?
Hi, my name is Kersten, and I'm a vice chairman of Infinity. Infinity actually started in 1993 in Israel. We still have a Israel office today, and we've done our first China investment in 2004. So since then, we have done about 130 plus investment in China, and still we have about 110 investment in China right now. We have about 2 to 3 IPO per year. That is quite constant in the last 5 years. And our strategy in China is work with the Chinese government, and our largest LP is a state-owned company in Zhuhai, and we manage one of the fund of fund from the Zhuhai government, and we manage the SOE money. So our strategy is China is a very complicated market, and without a local SOE, and the risk is high and the complexity is more. So our strategy in the past 18 years and has been always work with the local government, and we like to co-invest with the local government. We manage the local government money and so on and so forth. And in the past 5 years, we've been increasingly our investment in Hong Kong, and we've been doing a special situation in Hong Kong. In Hong Kong, we are focusing on deals that nobody can do and non-traditional way of approaching. So we've been focusing on special situation, white knight, so on and so forth. And that's our strategy in Hong Kong and perhaps in the rest part of the world. And in China, our strategy is with SOE, and Israel is more our base, and we have quite a lot of successful story in Israel. And a little bit background about myself. I studied psychology when I was in university, and so in the past 25 years, I tried to apply what I learned into the business. So I think that investment, like my colleague on the panel has said, so there's quite a lot of professional, and but I find it that the psychological part of entrepreneurship sometimes has been overlooked, and is worth our understanding about the entrepreneurship. So just happens in '99, I started my own internet company. I sold it in 2000, and I sold control in 2000 when IPO in 2001. So that's some background and what I hope I can contribute to my colleague and my guest here today is the psychological part of the entrepreneurship and also the psychological part of the investment as well. So this might be something interesting. We can continue talking, and I try to answer whatever question you have.
And just a little bit, and I've been seeing about close to 800 company. I keep a note of the people I met and try to analyze from a different perspective. And I do have some follow-ups and try to prove a theory that I've been studying the last 30 years. So that's my background.
Very cool, thanks. Maybe we can circle back with Edan. You mentioned that you put quite a bit of emphasis on ESGs when you make investment. Can you tell us a little bit about, first of all, what is ESG and why is it so important? But let me just add sort of my observation. About 15 years ago, I was in Silicon Valley and together with working with Costa, where we actually made a lot of investment in the clean tech space. And most of those investments have failed. Okay, so I mean, the bright spot is probably Tesla. Tesla is probably one of the very few companies that came out of that cohort, if you will, right? In 2008, 2009, I remember Al Gore and Tony Blair and Costa, Bill Gates were all preaching ESGs, clean tech, etc. So maybe you can tell us, this time feels different, right? Why is it different this time around compared to 2008?
It's a very good question, and I would probably say that we are less focused on the early stage venture capital type investing. So you're, for example, focused on very, very early stage, maybe Series A. We're probably C or D, and in some cases, we actually acquire control of companies. So it's a risk-reward issue. I mean, venture capitalists need to have 10 times their money in terms of return. I mean, when you invest in a Tesla at an early stage, like a napkin stage, you need to have extremely high returns because otherwise, most of your investment is going to wipe out. And you need that one or two home run to actually contribute success to your whole fund. That's the thesis behind venture capital. At least the upper quartile funds have had better repeated home runs than the ones that are lesser performers. Now for us, we're probably going after 2 to 3 times our capital. So that pencils into maybe 20 to 30% IRR from a risk-adjusted point of view. So as a consequence, everything that we invest in is, number one, not really early stage. It's maybe, it doesn't have to have a profit, but it does have to have a profile and directional development where profitability of cash flow is in sight. So we're later stage investing. And as I mentioned, in some cases, we actually acquire control. So the risk reward is extremely different. But I would probably also make the third observation, and I think you actually hinted at this, which is that it's a little bit different now. At least talking to my peers who are investing in the early stages. And we talk to them a lot because we're actually looking at their companies and then funding their growth or acquiring control of their companies after they finish with their early stage investing. And I would say that they're a lot more optimistic about their prospects. And I think it's probably what you're seeing around you. I mean, climate change has definitely driven the point home that energy transition is a must-have. In fact, it's fair to say that we're seeing a lot of very successful businesses take off because the world realizes they need to shift away from fossil fuels and into alternative forms of energy generation and energy usage. Things like battery technology, for example, where we're spending quite a lot of time looking at some of those prospective ideas. 5 years ago, we never would have touched any of that. But today, it's very, very different. So hopefully that actually sheds some light on some of your questions.
Okay, so maybe we can turn to Chris. You invest in early stage companies now, right?
That's right.
So Edan has skillfully avoided the question by saying that he doesn't invest in early stage companies. He only invests in companies that are closer to profitability. But you do invest in early stage companies. You do invest in environmental technology companies, right? ESG related companies.
Well,
And what's your view this time around compared to, I guess ESG 1.0? I guess we're ESG 2.0 now.
First of all, ESG covers a lot of topics, not just environmental topics, right? ESG also covers social dimensions, corporate governance, things like that, right? So we do not actively look at environmental friendly startups, but we did invest in one in Indonesia by chance. So when we look at ESG, I would say our role, the social impact concept from ESG, what this startup can contribute to the society. For instance, I was a kind of judge for the HKUST Sino competition 2 months ago, right? I like one of the winners very much. They do freeze-dried drink powder. It's a very trendy drink. It's nothing high-tech, think about it, freeze-dried, air-dried powder. This kind of technology exists 3 decades ago. But why I like this company, first of all, is because of the branding. Second, I think this is one of the best way to ship nutrition to developing countries. Think about the fruits. Think about the fiber. It's very, very expensive to ship fruits, fresh fruits, to developing countries. For example, the areas in Africa. But you can ship those powder economically, very cheaply. And then once the powder is in Africa, you just have to add water to it. And the children can have the nutrition and fiber, things like that. So this is the way I apply ESG. I don't, it's just myself, I don't like buzzwords. Personally, thinking over the last 10 years, we have seen so many buzzwords in the VC world, big data, crypto, Web3, AI, blah, 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 ESG. Big data exists 3 decades ago. Okay, so when some topics come up, like ESG, of course we will really put that on the headline because it's just part of normal human beings' DNA to be ESG conscious.
Yeah. Okay, so Kersten, maybe you can tell us what's going on in China.
Okay, so in China, our strategy in the last 3-4 years is we anticipate the worst case scenario, which is the US and China worst case scenario. So that's based on that assumption we make our investment. So we've been focused on energy related and food related and medical related and semiconductor related. So other than these 4, we don't want to touch anything else. So for example, we and our larger shareholder, we invest over 30 billion RMB into solar. So we are now the largest solar players in China. So from solar panel to battery to efficiency of the power plants to construction. So it's the full cluster of investment. So not only just invest in one company, we invest in a chain of company. So we become the largest player of solar energy and in China as for now. So I think this is driven by the worst case scenario. So if it happens, and it seems like the tendency of the worst case scenario is getting bigger and bigger. So we don't like to give a speculation about like 20% that might happen. So we just say, well, if that happens, what will happen to us and what we're going to do. So that's our strategy. And the second part is agricultural technology. As you know, China has getting increasingly dependency of import of food, and I think 3, 4, 5 years ago, China can still be self-sufficient in terms of food, and now I think the food is getting a serious situation, and China just cannot feed themselves. So food technology and also something we've been very focused on. Another one is biotech and medical related. And we also invest almost 1/3 of our investment into biotech and biotech related investment. So that's our portfolio mix. And lastly, semiconductor. Semiconductor, I say we are not that, we don't have expertise. Our team is, we do have a very professional medical and biotech team. And but however, we don't, our semiconductor is not as good as our other, such as biotech investment. So that is based on the scenario. So about China, yes.
Great. So I think we have to address the big elephant in the room, right? That is the geopolitics. I know it's kind of a tough subject for some of us, but it's an unavoidable subject, right? This happens from my observation, both at the direct investment, for example, U.S. funds is a major source of VC investment in Greater China, as well as LP investment into Asia-based funds that invest in China, right? So I'm curious, obviously, I mean, you guys all invest in different regions, but I'm sure you probably have LPs from the US, right? From time to time, you will invest in China or China Nexus companies. So I'm curious, maybe each one of you can tell us what the current geopolitics, including but not limited to the latest, executive order from the Biden administration with regard to this restriction in investment in China. What has that had an impact on your investment strategy, fundraising from a GP's perspective, as well as how you look at various projects? Can we start from Edan?
Sure. Geopolitics is actually one of the biggest issues facing the financial markets in Asia. It doesn't necessarily impact us directly, but it has impacted the financial market, generally speaking. I think number one, you're absolutely right. The LP base, many of them are from the US. And if you are China-focused, they stay away. It's basically local governments. For example, pension funds are big investors. Many of them are starting to shift their capital away. I was at a private equity conference in Hong Kong a few months ago, and the biggest issue was geopolitics. If you are 100% China-focused as a GP, people are turning you down in terms of fundraising. Maybe a year ago, 2 years ago, that's not the case. Even if you're a top performer, people are saying, sorry, we don't have any allocation for you. So now funds have to basically transform themselves into China Nexus Fund, where maybe 50% of the capital goes into China, and then the rest goes into US, Europe, with a China angle. So I guess that's the first observation. The second observation is that it's impacted the IPO market. Now, of course, what's happening with Hong Kong or the A-share, a lot of it is induced with the slowdown in China. I mean, China's facing some serious issues. But the geopolitics has not helped because it's actually shifted the marginal interest in Chinese stocks away from these markets. So people like us, we rely in part on taking our companies on a successful IPO in order for us to exit. Well, guess what? Unfortunately, the timing for that has actually been pushed back, who knows, a few months, a few years. We're not quite sure, but I guess we'll find out. And then I guess with respect to our investment strategy, because we're relying on the development finance institutions, as I mentioned to you, it's been less of an impact for us. If we were relying on pension funds in the United States, then obviously we would get hit pretty hard. And I would say, thankfully, that's less of an issue for us. Now, our investors have actually been encouraging us to actually shift away from China, not necessarily because of geopolitics, but because China is actually becoming too wealthy for development finance institutions. So they would rather that we invest in the rural regions in Thailand, or in Vietnam, or in Indonesia, or India. So that's not to say that we're not interested in China. For the right businesses in China, we actually would still be very, very keen. But it's fair to say that we're shifting our attention away, and as a consequence, growing our offices in the ASEAN region, and actually probably not adding to headcount in Shanghai because we're shifting away. So I would just share some of those observations with you in response.
Thank you. Chris?
I think that if investors start to think about investment opportunities outside of China after the geopolitical tension has started, I'll say that it's already too late. Too late. Because we have been looking at the ASEAN market since 2019, and so we actually don't face much problem right now when answering our co-investors or LPs inquiries about the allocation topic. And the reason why we avoided this problem is because we love entrepreneurs. We follow the entrepreneurs. Actually, the entrepreneurs, I would say 70% of the time are smarter than us. Entrepreneurs are actually smarter than investment managers, according to my experience. Why? Because they are on the battleground on an hourly basis, not even daily basis. They know the market. And if they move to somewhere else, follow that. It's always the right decision to do. And so we've been doing that since many years ago, and the return is very good. But also, before the geopolitical tensions started, when we look at the data protection privacy from China and US, we actually predicted that this would happen. And we actually asked or recommended some of our portfolio companies to move the data center out from Hong Kong. And because why? Because I have some connections in IBM and Kindle, and the clients since 2017 have started moving the data centers out of Hong Kong, years before the geopolitical tension. So we sense that, and we recommend our clients to do so. And you know what? Turns out we're right on with the entrepreneurs and the big corporations right again. And look at Hong Kong right now. We can't even use OpenAI openly, right? Any one of us here wants to use OpenAI, and you have to do it through the VPN. It's kind of stupid, and it's a shame. But when I go to ASEAN right now, Singapore, Malaysia, or even Vietnam, I have no problem using OpenAI. But here in Hong Kong, well, good luck. Thank you.
Okay, well, Kersten.
I think in the past, Hong Kong and many other private equity or venture venture capital has been lucky because there's many US LP who want to invest in this part of the world, especially China, and they don't know how to do, so they go through some VC and PE. So that has been gone for like 3-4 years. I have a few friends who started their own fund about 2 years, and they raised zero money from the US LP. So basically that is basically gone. And they try to raise money from the new rich from China who has made successful NASDAQ IPO and want to take the Chinese counterparty to the NASDAQ and that story has been gone too. So I think the two major LP in the market is disappearing. So it's totally gone. I think each of the fund who survive and develop a strategy of their own. So for us, and we've been since day one, since 2004, our first deal in China, we always co-invest with the Chinese government. So that has not changed until today. And in Hong Kong, we want to be doing special situations, so where we can add value because numerous value we can add to the special situation. Particularly, I think we understand the entrepreneurship mindset. I think like my colleague, my panelist, Chris, I say the entrepreneurs are smarter than us. I think that they are operating in a different mindset. I would call this mindset as a street cat. And it's really a street cat mentality. And most of us is a house cat mentality. So it's two different mindsets. So if you be able, if there's a manual or there's an understanding of how to deal with those street cat thinking, if the street cat has a manual for the house cat, they can easily raise money from the fund and from the professionals. However, on the other hand, if we, as a professional who has a manual for the street cat, that is very interesting prospect. So that's what I want to do in the past 10, 15 years of hobby. So we can share that as well. So geopolitical, I think it is happening. So I think numerous simulation has been deployed. For example, if the US shut down the SWIFT, what is going to happen to us and to China, to Hong Kong, to everyone? I think many large players, family office, and they've been doing simulations already. So I think that is number one geopolitical risk that we are encounter. So many family has been planned long ahead of time. So that's number one. Number two, I think China is also doing this simulation again. So interesting to see how the Chinese can play that simulations. And then also the embargo, if the worst case scenario that is huge, China foreign trade is a huge things for China, what that will happen. And I think that simulation has been also played quite a few times in the past. So recently I went to Dubai, so people want to see that this two simulation can go visit Dubai, and which you can see firsthand, and how this the SWIFT is closed and embargo is applied, and what are you going to do? So I think that the Chinese has been well planned, these two scenarios. There's so many other scenarios I think they're planning as well. So I think it's interesting to see, and but I do optimistic about that. As long as this scenario, if we, it's like a game theory. So I think if the Chinese manage well, and the worst case is not unlikely what happens. So I'm optimistic about the happening of the worst case scenario so that's my outlook for the geopolitical situation right now.
Okay, thanks. So let me open this up to the group here. Please say your name and your organization before asking the question. Let's limit it to one question per person, please. Thanks. Person in the back. Oh, sorry. Shoot. Oh.
Thank you. My name is Horace Ma, Coach International Chief Financial Officer. I've got two questions indeed. First, I would like to direct a question to Chris. I think you kind of pointed out sharply about the current situation regarding geopolitical tensions that have created the impact to Hong Kong, especially in the technology side. With the example of OpenAI, I believe that there's more coming, especially after the execution of these Biden administration's sanctions over technology, especially those high-end technologies in this area, especially. So the development of AI in particular, I have some friends, they are going away from Hong Kong because they say that, okay, we cannot have the high-end machines to work on the learning side of AI. So they can't, go to Taiwan because Taiwan got the most advanced machines there. So how do you see the AI market in Hong Kong in general? And are you going to, if there's an AI startup here or kind of, some investment opportunities here, will you kind of do it, or you just declare it because there's no development anymore because of this geopolitical tension? And then the other questions I would like to direct to is about the infinity approach, collaborating with governments of China. There's several levels or tiers of governments of China. So how are you going to select them, for example, with the city, with the province, or even with the state? Because their strategies of their policies may waver in time, that they are not insane, and therefore, for example, some city projects, it may be sacrificed in order to give way to this province project or even to the state projects. So is it kind of, in fact, a very high risk act to collaborate with the local governments in considering, for example, like today, most city governments or even provincial governments, they are kind of, having trouble with their treasury, with the finance. So what is your view there? Thank you.
Start with Chris. Thank you very much for the question. So if you ask me if the AI startups are investable in Hong Kong, I'll say it really depends, okay? If you're a startup trying to develop another LLM, the large language model in Hong Kong, I wouldn't invest in that startup. Why? Because even Sam Altman has already stated that OpenAI is trying to walk away from LLM. Size does not matter sometimes. Now it becomes, it's a matter of efficiency. Okay, China, a lot of Chinese so-called AI companies, they are still pursuing the LLM strategy. OpenAI has already said that they are going for efficiency instead of enormously large LLM. So if you are doing like the fundamental AI research in Hong Kong startups, I would look at it, but I would not invest in it. The main reason is about the source of talent. Okay, Hong Kong here, we don't have that many AI engineers. So we like a lot of universities here in Hong Kong producing a lot of great AI engineers every year. But in terms of the quantity, nothing comparable to what China can offer. And if you want to talk about the cost, look at what Malaysia and Vietnam can do. They actually have a great pool of AI engineers because they have the freedom to use OpenAI, right? Without any connection problem without any session problem, right? So in terms of cost, in terms of supply of talents, I wouldn't look at any AI ROI. I would look at it again, but would not invest in AI R&D startups in Hong Kong. But on another layer, let's say AI applications. Okay, you're not reinventing the wheel. You are putting different blocks of AI and trying to build a new product or new service offerings to fulfill certain kind of demands in the market. Okay, then I'll look at this kind of company. Actually, I like this kind of company because look at what Microsoft, OpenAI, Amazon, and Google, look at what they are doing. What is the chance of a startup that can produce a better core technology than these tech giants? I wouldn't say the chance is zero, but the chance is 3. Okay, so I'll focus on the application layer here in Hong Kong rather than the R&D layer. So that's my idea. Thank you.
Okay, so how do you work with the Chinese government?
So managing the Chinese government risk has been our top priority for the last 15, 20 years, and I think we can share a few tips. So first of all, I think that like what you're saying, the Chinese, not every government has the money, and in some of them they do need support.
I think one of the questions is what level government are you working with?
Okay.
Provincial level, is it, you know?
We are more focused on the city levels. So the city level is what we've been focused. Provincial level sometimes it take much longer time to execute, and the variables you have to be taken into consideration is much higher. So we do focus on city level. So in the past, and we have about 20 China city to manage, and we're doing okay. And so number one, city level. Number two, we pick the city who has the money. For example, in one of our largest SOEs in nearby Zhuhai, so they want to deploy the money. They have a mission to deploy the money. So we was lucky, and we're also managing a fund of fund from them. So we try to match other money from the local entrepreneurial and also the other cities as well. So number three, I think, is the strategy for what you invest in. So some of the projects, yes, you have to give up the priority to central governments and to provincial government as well. So, but in most of our cases, I think that because we do believe money in the bank is more than empty promise. So for some of our investment, we look at their action more than their talking. So we see numerous up and downs for different cities, and but some of the cities they do their missions have to deploy, and they are quite easy to understand if you do enough investment in China. You do read what they say, and it's not that difficult. I would say it's much easier than the Chinese entrepreneur, which is another dimensional complexity. Yeah.
Okay.
So this is John from SkyVenture. So I want to ask you guys to stay away from Hong Kong startup who is focused on China market, and should they be do their market strategy to Asian countries?
Can you repeat your question? The question is, are they staying away from Hong Kong startups?
Hong Kong startup will focus on China market.
So rephrase, are you investing in Hong Kong startups?
Yes, we do, and we are still investing in Hong Kong startups, and we don't limit what market they are looking at, as long as it's sustainable, profitable. Because I don't care too much about grow the business in whatever markets, we're okay. But of course, if they're not looking at the ASEAN market, I would highly recommend them to look at that market, not just for the sake of growing sales. It's also about recruiting talents, because right now when you look at staffing, be it like a general staff or IT talents, ASEAN market does offer a much more economic choice. Okay, so for example, in Malaysia, it's one third of a Hong Kong engineer. That's very attractive and very stable. Not much staff turnover. Like in Hong Kong, next year they ask you for about not next year, maybe 6 months later they ask you for about like 15% increment. Let's say, no boss, like I'm an AI engineer, the market is hot right now, you know, so 15% increment. I would say bye-bye. I would just go to Vietnam to hire 3 engineers. Okay, so that's the reality of business.
So do you guys invest in Hong Kong? Edan, do you invest in Hong Kong?
I think we don't naturally invest in Hong Kong simply because Hong Kong is too developed for our investors. But in direct response to your question, we would actually look at Hong Kong businesses that are geared towards the Greater Bay Area. And I think the Hong Kong government is actually encouraging companies to actually focus on Greater Bay Area because it's a larger market with a lot more potential for development and growth rather than Hong Kong, which is obviously a very advanced, mature market in and of itself.
What about you?
We don't invest in Hong Kong startups. We don't. And we will help them as personal levels, as giving some advice. And this is just pure my personal things. And because I have my own startup in '99, I know how tough it is to have a startup in Hong Kong. And I have my internet startup, and I went to 40 investors, and none of them invest in me. And maybe I was not that, my pitch, I have to work on my pitch, of course. And but the problem is just difficult. So I think I was like 10 days away for shutting down my company. So I was lucky, and I sold my startup control to a wealthy second generations, and at that time he just want to show off to his friends that he has an internet startup. So I remember that day is very clearly. And, so after 11 months of struggling and no good sleep, and we shake hands and have a deal, and so I went home and took off my clothes and ready to sleep, and the phone rang. So the guy who just verbally bought my company and asked me to go to a local club. So I had to show off and at 11 p.m. at the local club. So I thought he was going to regret the deal. And but what happened is he just showed off to his friend that he bought an internet company. And then what happened to him is his friend bought an internet company also on that day. So they just like showing off to each other. And he don't quite remember my name. He just called me out and like 10:30 he said, fat boy, and I need you to come. So I show up, and the other guy is another wealthy second generation. He bought an internet company. And then, so what happened, why I was there is because he had no idea what my company do. So he said, look, please tell him what you do.
This is pure
and because his CEO was there also, and the other guy has no idea what he bought. So that was the situation. So I understand how hard it is. This is not small second generation. This is like the big 5 property guy in Hong Kong. So at that time, I was just totally.
Wow, that's amazing.
You're
some,
so
of,
lucky.
some of us like expensive handbags. Some of us like expensive sports cars. Others like startups. That's pretty amazing. So Gary, I don't know if Gary here. How much time do you have? We have 3:30 already. So I'll take one last question.
Yeah, one last question.
Yeah, let's take maybe one last question. So the gentleman in black.
Hi everyone, I'm Darren from Insight Capital. My fund is very focused on sustainability and tech investments. Perhaps I would like to know how's your experience, Edan, in terms of promoting and educating your investors, LPs, to support these net zero initiatives and how to help the world to decarbonize and support for a better future? Thank you.
Thank you for your question. Glad to see there's someone who cares about sustainability. Our investors don't really need education. In fact, if anything, first of all, they have their own standards. The one frustration I have is basically all of these development finance institutions, they all come with their book of standards. And it's our job to try to actually take all 5 of their standards, make sense of them, and actually use a common language and platform to try to comply with them. So if anything, they're the ones educating us. But we definitely have a point of view because we're the people on the ground looking for businesses and entrepreneurs that fit what we're looking to try to do. So I think it's fair to say that it's a two-way conversation. They tell us what they want because they have their standards, and we tell them what's viable on the ground. So I'll give you an example. Data measurement in the ASEAN or India is extremely challenging. The investor obviously wants us to measure everything. For example, how much carbon do you reduce? Well, in some cases, we have to basically reinvent a methodology because you don't actually have these numbers readily available. When we do due diligence and we think about how compliance works, we basically spend a lot of time thinking about a measurement system that we can actually put in that will track the progress that the company will be involved in for the next 5 years. And that's our value add. And until we basically show that they're making progress, our investors are not convinced that we're actually doing good for the world. So it's a challenge, particularly in the lesser developed markets that I'm talking about. But at the same time, that's a challenge that we readily embrace because once we figure out how to measure it and then how the company can achieve their targets, then you've got a successful example. And you can tell people, hey, we're actually doing good for the world. So hopefully you might be able to learn a few things from that.
Any comments from you two about how you educate your LPs, I guess, about ESGs, sustainability?
Well, for my case, I'll not say I would educate my partners or LPs on. I wouldn't educate them on try to learn things from them. I'll say like our ESG perspective is more like be socially responsible, like are you making something good for the society as a whole? That's our focus. So we don't invest in gaming, gaming technologies, not those like Xbox or PlayStation. I mean like gambling technology. Actually, a lot of good startups in ASEAN are doing gambling technologies using NFC, really advanced NFC technologies. But it's really amazing and very, very profitable. I would say gambling industry, I mean the technology side of the gambling industry is very lucrative. Extremely high margin, but I don't like that. Personally, I don't like that. I don't gamble. Although I am an VC practitioner, I don't like gambling. So we pass on that investment, and we try to be socially responsible in the sense that we ask all our portfolio companies to be on time for salary payments. This is our minimum requirement. We're not dealing with carbon credits, those things that we do look at this side of the ESG perspective. And when I just want to add a few more words about that gentleman's question, whether we look at Hong Kong startups. Yes, we do. Another reason why we look at Hong Kong startups is actually from the social perspective, because a lot of teenagers right now in Hong Kong, they're struggling, to be honest. Okay, the paycheck is not just enough to sustain to have a decent living in Hong Kong, and so that's why I would encourage the new grads or teenagers to start a business. And most of the time they have very good ideas. Okay, right now there's no information asymmetry, there's no knowledge asymmetry, but there's, I would say, opportunity asymmetry. So we're here to help them to gather all the resources or opportunities they need to build a business. That's what the Hong Kong entrepreneurs need, and we're trying to give back to the society from this angle. I was born in Hong Kong. I love this city, so that's why I joined a lot of programs developed by HKUST on helping young entrepreneurs to build their businesses. So I'll bring in my partners' experience in the China market as well as the ASEAN market, help them to grow. So that's our ESG strategy.
Cool. Kersten, any comments?
So far we don't have any investor come to us and ask for ESG. If they have, I will just refer them to Olympus. And or the only thing we can say is you have to expect a much longer, lower return, much longer time. If you still want to do it, so far we haven't introduced anyone to Olympus yet. That's us. So we are more focused on in special situation. People know things we can help them to achieve. Yeah.
Well, cool. With that, I really appreciate everybody spending the early part of the afternoon with the panelists, and let's all give them a warm. Thank you. I'm sure you guys will stick around for a little bit, right? If you have any questions for any of them individually. Well, thanks again.
Yeah. Can I invite all the speakers remaining at the stage? Can I invite all our members to come to the front and we